Alrighty, welcome back everyone. Thanks for joining. In this video, we're going to be talking about three companies that are in my portfolio. We have Salesforce that reported their earnings last week, and then we have Peloton that also reported their earnings last week. They're having a pretty rough time. And then we also have Snowflake, the super fast growing, extremely overvalued, expensive stock. They also reported their earnings last week. And what I'm going to do is not only just talk about these companies, but I'm also making trades with them. I'm buying and selling these companies. I own Salesforce as one of my biggest holdings. I also own a little bit of Snowflake and I own a little bit of Peloton. And I've recently trimmed my position on Peloton. I'm going to explain why in this video. So we're going to be going over all three of those holdings. I'll also give you an update on the performance of the Story Fund, which is my hyper growth portfolio. It's my aggressive growth centered portfolio. And we'll look at that benchmarked against the S&P 500. So if you like this type of content, be sure to hit the thumbs up button. Also, if you want to see the progress of this portfolio week after week, benchmarked against the S&P 500, you can follow along for free by hitting the subscribe button. Now, if we go ahead and look at my portfolio benchmarked against SPY, this is what it looks like, updated as of Friday's close. We're basically perfectly matched right now. We're almost within 0.5% of each other. And that's obviously not what I want. I want to be outperforming SPY. That's the goal of this portfolio. I still think that I can, but we've had a couple things that have set me back a little bit. One of them, of course, is Alibaba. This company has just tanked. And I did some buys in like the 220s, like 205. And since then, it's just fallen into like the 160s, the 170s. And there's seemingly no end in sight. So Alibaba could keep falling, but my opinion on that, just a preview of it, I'm still bullish on the company. I do not believe it's going to be delisted. I think a lot of these concerns that people are talking about will eventually move on as China moves through their regulatory issues. They're regulating a lot of these companies. And when I read about the regulations, a lot of them actually make sense. So I'll be going over this in another video in more depth, but I'm still bullish on Alibaba. I haven't sold a share, and I might actually do another small buy if it keeps dropping enough. I don't want to have too much exposure to it, but I might be doing another small buy. Now, let's go ahead and move on to the companies that are actually bigger holdings in my portfolio. Salesforce reported their earnings last week. Salesforce is what I refer to as mini Microsoft. We have Microsoft right there, the big software giant. They have lots of business to business, but then we have Salesforce coming after them. And Salesforce is building out a suite of products that I think is highly competitive to Microsoft. Yes, Microsoft. They're competitive. They bought MuleSoft. They bought Tableau, they bought Slack, right? They're buying all these different companies and they're piecing them together in a really smart way. These aren't terrible acquisitions. They're really putting this together in a cohesive way. And Salesforce is just an absolute beast of a company. And I'll try once again to illustrate how much of a beast of a company this is, because I say it over and over and over again. I am going to make money investing in this company. I think 99% odds I'm going to make money investing in this company. The chances of failure, of a competitor coming in, of them being wiped out by some event, in my opinion, is extraordinarily small, 1%. I think that this is such a solid buy in my humble opinion. So I'm going to try to illustrate that once again. Now, if we go to Salesforce's quarterly earnings, this is what it looks like. They reported that they beat their earnings. Surprise, surprise. Of course, this is no surprise if you know about Salesforce. They beat their earnings and they beat their revenue. Think about this for a minute. How often does Salesforce beat their earnings? Let's take a look back to 2017, and we'll go through this quarter by quarter. The earnings surprise. Did they outperform the estimates or underperform? In 2017, they surprised beating it by 6.5%, and then 3.8%. 61%, 50%, 21%, 26%, 52%, 40%, 13%, 18.7%. They just beat it a little bit on that one, but it still counts. They beat it by 115%, 132%, 38%, 37%, 59%. They beat their earnings every single quarter. This is a company that since 2017 has never not beat their earnings. In fact, we can look at this in a different view. Look at the actual estimates by the analysts and then their actual earnings. Their earnings is always higher. Sometimes it's double as high. So when I look at the PE ratio of Salesforce and I see that it's trading with a forward PE of 60, that's too high. It's probably lower. It's probably really trading at a forward PE of like 50 because the analyst estimates are always lower than what they report with their quarterly earnings. If the next 4 quarters are going to look like the past, then this company's trading at a lower PE ratio than's being reported right now. So Salesforce, the reason that they can beat their earnings to this extent is because of how much control their business has. This company has a stranglehold on all the companies they do business with. They are totally reliant on Salesforce. They can't move away. They're too integrated into the product. They have too many ways of upselling their product. It's just an incredible company, and it continues to grow like crazy. Look at the actual growth of this quarter over quarter. It's just amazing. Every category of it is growing. And if we break this down on an annualized basis, this is what it looks like. Every single year, it's growing substantially. Every important part of this business. So it's no surprise to me that Salesforce beat their quarterly earnings. They do this every single quarter. I think they'll do it for the next 4 quarters. And I also don't believe that I'll underperform the S&P 500 with this holding. I think that Salesforce is going to outperform a SPY. It already has since I've been investing in it. But it's a great company, a great moat. I think very small downside, and I continue to be extremely bullish on this company. Now, next up, the next company that reported their quarterly earnings is Snowflake. This is the data lake company where it's a product that companies can conveniently and easily back up all of their information, all their data into this cloud. And then Snowflake offers a convenient way to pull that data, to run analytics on it, to do anything they want with that data. Their competitors are AWS Redshift, so Amazon, and Google with Google BigQuery. Now, I've looked at the comparison from a technical aspect, right? From these competitors compared to Snowflake. And the basic summary, without going into a lot of detail, is that Snowflake is simply more convenient. It's easier to use. It's just a simpler, easier, more convenient product. And developers are no dummies. They want what's convenient as well. They're just humans. They want to use what's easy to use and what's convenient to use. Snowflake is convenient. So that is the big selling point of it. And Snowflake does have a number of technological advantages over the competitors. It has some things like easier updating, right? Easier management of it, things that make it so that developers' lives are easier. And that's why this company is growing so fast. Now, I'm currently in the green on Snowflake by just a bit. I trim my position to a 1% position because this is a very high risk holding. The company's growing fast, but it currently has an $85 billion market cap. That's a big company for one that doesn't even revenue $1 billion in a year. So the price to sales on this thing is like 100 right now on a trailing basis. It's very expensive, but they did beat their earnings. They posted that they topped their estimates, and they also guided for a little bit slower than what analysts expected. But overall, the response to this wasn't too bad. This is what the revenue growth of Snowflake looks like. It is growing extremely fast. This is on a quarter over quarter basis, and it's growing as fast as most companies do on a yearly basis. In fact, in 1 quarter of Snowflake, they grow more than most companies do in an entire year. Every 3 months, this company's growing rapidly. It's a money-losing company. It has high operating expenses. They're spending a fortune to grow, but they are growing. They are succeeding in their mission to grow. So that's the important part of this story, is that this company is growing fast. If we look at the actual numbers on this report, this is what they reported. $254 million, which is 100% revenue growth. So they grew the company revenue by double. And then the next metric we have is net revenue retention rate. This is 169%. This means that out of the same customers they had last year, their existing customer base, they made 69% more revenue this year from those customers than last year. This is astronomically high. You can compare this to other amazing software companies like Cloudflare, like CrowdStrike, fast-growing, the enterprise cloud software companies, Salesforce, Microsoft. None of them are even close to this high. That is extremely high net revenue retention rate. I've never personally seen a company with a higher net revenue retention rate. I've literally never seen it. Their total customers grew by 60% year over year. Now they have almost 5,000 total customers. The customers that are paying them over $1 million per year, they gained 116 in the past 3 months. So they're not only growing their total number of customers, they're growing the high income customers. They're growing the customers paying them over $1 million per year by over 100 every quarter. And again, if these customers that they're gaining have the same type of net revenue retention rate, for everyone that's paying them $1 million, they'll be paying $1,600,000 next year, right? That is what the numbers lead to. That these companies that are signing up, They're going to be doing more and more work on Snowflake in the future. And so this company gains all these customers, and it's kind of like tapping into their business. The more business they do, the more they grow. It's just like AWS or Twilio. This company just makes more and more money. Now, they have some other data here. They gained more Fortune 500 companies. They gained more data marketplace listings, and their customer satisfaction rating is very high. Now, this is one of those companies, again, that's a little bit more risky because so much of the growth is already priced in with an $82 billion market cap. If the growth slows at all, if it really does slow down in a meaningful, material way, and they don't hit their own guidance, then this company will go down in price. So I'm not going to bet on Snowflake like I would Salesforce or like I would Google. I'm simply not going to make that big of a bet, but I do think it's worth having in the portfolio. Now, the last company that reported their earnings last week was Peloton, and this is what it looks like. This is what the earnings report looks like. Peloton shares fall after the cycle maker posts disappointing earnings and outlook and cuts the bike price. Not good news. To add on to this news, soon after this earnings report came out, like a couple days after, Peloton says the US government has subpoenaed the company. And they're requesting more information on how dangerous their treadmills are, because at least one small child died to one of their treadmills, which is very unfortunate. Now, on this news, I know there's a lot of people that say it's the responsibility of the parents to watch the child, but I do wonder, after 20 years plus of having treadmills, how we haven't designed them to be safe for children. You think we would have figured this out by now? So I think it's good for the US government to look into it. I think an investigation is worthy. Anytime there's a device that's commonly in the household and it ends up with the death of a child, I think that's worth investigating. And I say that even as a Peloton shareholder. But going back to their actual earnings report, everything was bad with this. I really could not find any silver lining. And I'm an optimist. I'm trying to find good things about the companies that I'm invested in, but this is reality. This doesn't look good for Peloton. Their shares fell after disappointing earnings. They missed their earnings outlook a lot. I mean, it was a pretty bad miss. If we go back to the same graph we looked at with Salesforce, how they routinely and consistently beat every single earnings, just like clockwork, Peloton was doing that. They were earnings surprises in the positive. This one is in the negative by 74%. This is what the analysts predicted. This is what their actual earnings were. So much worse than expected. But beyond the actual earnings, that's something that investors can forget about with fast-growing companies that have future potential, that are at least projecting out in the future that they're going to continue to grow fast. Peloton says that their growth is slowing and they're cutting the price of their bike, their flagship item. And that's something that I guess you can argue may be a positive if it leads to more subscriptions. They are still growing their subscriber base rapidly. The churn has gone up a little bit, but it's still very low. It's like 0.75%, right? They have very low churn. They're growing their connected fitness subscribers. And this is the important metric. They're still growing this, but the overall revenue didn't look good. It went down from the last quarter. They have mounting expenses because of the recall. They're just facing a lot of challenges right now. So in the meantime, while there's a lot of momentum moving away from this company, this isn't one like Alibaba that I'm doubling down on, that I'm buying more of. I actually trimmed my position on Peloton to preserve some of my gains in it, and I really lowered my exposure in it. If I look at my actual gains to the total value is $937, and my gains are $635. So most of what this holding is currently is gains. It's the house's money, aside from like $200. So this is one that I really have trimmed my position a lot. I don't want a lot of my portfolio riding with Peloton and determined by Peloton, because I don't think that they're in charge of their destiny as much as other companies. I think that Salesforce is very much in charge of their destiny. Microsoft is, Amazon is, Google certainly is. These companies determine which way they go. They are very strong companies. They can push their earnings how they want it. They can buy what companies they want. They can do whatever they want. Right now, Peloton is getting bullied around by the government. They're getting bullied around by different issues they're facing and recalls, and it's just a very difficult situation for them to be in. So this is not a company I'm doubling down on. In fact, I've largely lowered my exposure to it, and I'll wait and see how this one does in the future to see if my opinion changes. So there you have it. There's an update on Peloton, Snowflake, and Salesforce. My thoughts on them. If you want to see more content like this, I'll have more out next week, and I'll show you what happens with the portfolio if we're able to take the lead over the S&P 500. And also, if you want an updated link with the target allocation with every one of my holdings, there's an updated link in the description for you. So that's all for now. I'll see you in the next video.